eminent speakers who would be deliberating on certain topics which are very close to our heart. As Comrade Franco had said, we have Comrade Srikantha Mishra from All India Insurance Employees Association and Comrade Dushman Chauhan, he is from NABARD Officers Association. Now we all know the role of insurance sector in the progress and economic development of the nation, how much money Life Insurance Corporation has been putting up for the government to run. We also know what happened during the pre-nationalization era, where the private insurance players were nationalized. Now we also have NABARD, which has played a significant role in the Green Revolution, in emergence of India as a power in food grains. I'll first invite Comrade Srikantha Mishra of All India Insurance Employees Association to share his thoughts on this occasion, the seminar, Save Public Sector, Save the Nation.
So good afternoon, friends. Warm greetings from the All India Insurance Employees Association. The topic is insurance in national development and the roadmap. Friends, you know the insurance sector, it plays a very important role so far as the financial sector, overall financial sector in India is concerned. In fact, insurance, it mobilizes the small savings of the people, converts them into capital, and makes investment in the social and infrastructure sectors. This is basically so far as life insurance is concerned. So far as general insurance is concerned, it protects not people, it protects property, it protects assets, mobilizes the resources and channelizes these resources for national development purposes. By its very nature, I feel that insurance should be under the state control. When you sell insurance, you don't sell any product. Essentially, you sell a promise. You make a promise that you are going to pay such and such sum of money in the event of someone's unfortunate death. And when you are selling a promise in the market, and if this promise is backed by the guarantee of the state, then there is nothing like it. Because no private sector can be believed to honor their commitments after 15 or 20 years. And when I say this out of our experience, the experience of India and also the experience globally. Rather than talking about India, I'll give you one recent example from what happened in the post-tsunami days. 2004, a severe tsunami struck a major part of Southeast Asia. People, they lost their lives, they lost their precious savings. There was huge destruction everywhere in Southeast Asia. And when the people lost their claims with those foreign companies who are now making a beeline to make investment in India, they took a plea that those claims cannot be settled because tsunami was not covered under as per their terms of contract. So they were not ready to oblige, or they were not ready to honor the commitments that they have made. And they took a specious plea that tsunami was not covered under the terms of the contract because tsunami, essentially it happened to be an act of God. Ultimately the matter was taken to court of law. And in the American court, when the insurance companies took the plea that tsunami claims cannot be paid, the lawyer on behalf of the unfortunate policyholders, he was also equally intelligent. He took up the argument, let us for a moment assume that tsunami is an act of God, but who is the representative of God on earth? It is the state. And who represents the state? It is an insurance company. So ultimately the insurance companies will have to settle the claims on behalf of God. Even if we assume that tsunami was an act of God, ultimately the claims were settled. You would have seen the famous movie Oh My God, where the major part has been played, or the main protagonist role has been played by the veteran actor Paresh Rawal. He was playing the role of the protagonist, but unfortunately he joined BJP and he was instrumental in ensuring that FDI in India was increased. That is an altogether different story. But essentially insurance should remain in the state sector. Why? In the year 1956, 245 private companies, they were amalgamated, they were nationalized, and the Life Insurance Corporation of India came into existence. 1972, the general insurance business was nationalized. So very briefly, let us try to analyze what is the contribution of the public sector so far as national development is concerned. You will be astonished to know, in 1956, when the life insurance business was nationalized, the assets and liabilities of the private sector were transferred and the public sector life insurance corporation was created. Government of India gave an initial equity capital of only 5 crore. But when the assets and liabilities were transferred, it was found that the liabilities of the private companies were in excess of their assets by a sum of around 75 lakh rupees. But today, in the year 2016, I can proudly say that the public sector life insurance corporation of India, it started its journey from a humble origin of a mere 5 crore, not 5 crore. If you take away that 75 lakh rupees deficit, it turns out to be 4 crore and 25 lakhs rupees only. But now the LIC is sitting on an astronomically huge asset base of 20 lakh crore. We want to ask a very humble question to our ruling classes. You give us any example in the world, any institution which has grown from 5 crore to 20 lakh crore. 1957, just 1 year after nationalization, LIC had in its books of accounts only 51 lakh policies. Today the LIC has got 31 crore individual policy holders. And if you take the group insurance business, I think the total policy base of LIC will be around something like 35 crore. And I am proud to say, because when I represent my organization, All India Insurance Employee Association, I also want to act as an ambassador of goodwill for the Life Insurance Corporation of India. Excepting 4 countries, the US, India, Indonesia and China, there is no country on earth which has a population which is bigger than the total number of policyholders of the Life Insurance Corporation of India. And how do you judge the efficiency of a public sector or any organization? In the first half, we are listening to some very interesting and lively debates. All sorts of canards are being spread against the public sector and particularly the workforce. They say that these babus don't work. Without going into a general debate, I just want to concentrate to my own industry, life insurance industry or the public sector, general insurance industry. We are told that the employees in the public sector, they don't work. How do you judge the efficiency of the workers engaged in an insurance industry? I think the most commonly accepted and the best yardstick to judge whether the employees are efficient or not, the test of efficiency for an insurance company lies in its claim settlement ratio. And today, the government of India itself says, the Insurance Regulatory Development Authority itself says that on an average, LIC settles 99.66% of the claims. Then how on earth can you say that the workers in the public sector, they are inefficient? Now when we bring some policies, naturally there are some people who cannot make their premium payments on time and their policy lapses. But you will be surprised to know that while LIC has a lapsation ratio of a mere 5%, there are big shots in the private insurance industry in India today. Their lapsation ratio is of the order of around 30%. Where is 5% and where is 30%. Now some time back, there was a campaign and our government, or rather the main political formations, be it Congress or BJP, they used to give the arguments that unless and until FDI was introduced into India, which was done in 1999, and 26% foreign equity was introduced, subsequently the ruling classes started clamoring, unless and until insurance FDI was increased from 26% to 49%, you are not going to have sufficient funds for infrastructure development. And the most important argument that was advanced, insurance penetration cannot be increased. Insurance density cannot be increased. And you will be happy to learn that the International Monetary Fund, when I am giving the example of the International Monetary Fund, I don't want to sound megalomaniac. But one of the most ardent critics of public sector all over the world has been the IMF. And given the tremendous functioning of the Life Insurance Corporation of India and public sector general insurance industry, an institution like the IMF had to concede way back in 2012, so far as life insurance penetration was concerned, LIC was the number one institution in the world. So far as general insurance penetration was concerned, public sector general insurance, that was the number 3 in the world. Then where is the question of efficiency? We have an insurance penetration of 3.1% in India. But what is the level of insurance penetration in the US? The citadel of world imperialism, world capitalism. That is only 3.2%. Our humble question is, what is the per capita income in the US? What is the per capita income in India? And if India has got an insurance penetration of 3.1% compared to 3.2% in the US, 2.9% in Canada and 3.2% in Germany, how can you say that we are lagging behind so far as insurance penetration is concerned? But unfortunately it was told that if the foreign players were not allowed to increase the foreign direct investment in the insurance industry, we won't be getting sufficient funds. There is a huge hue and cry. And ultimately, the Modi government, immediately after coming to power, in March 2015, they passed the Insurance Laws Amendment Bill, subsequent to which insurance FDI was lifted from 26% to 49%. But comrades, I can take legitimate pride in the fact that my organization, even though numerically small, but percentage-wise the biggest organization in public sector insurance industry, we could show to the government of India, with the help of the working people, with the help of the progressive section of Indian society, with the help of the intelligentsia, that what a trade union can do in a functional democracy. Be it the Congress or the BJP, the ruling classes, they were clamoring like anything that FDI was needed for infrastructural development. We talked to the government, we talked to the standing committee, we talked to the select committee. We wanted a humble question. Insurance FDI was first introduced in 1999. The first foreign company that started doing business in India was in October 2000. So October 2000 to October 2015, let us say, 16 years time has elapsed. And is it not long enough a period of time to make an objective assessment, to make an honest review as to whether FDI has been actually beneficial or whether more FDI is actually needed for the Indian insurance sector given the huge contribution of public sector insurance industry? We wanted the government to clarify. Two arguments were given for introducing FDI in the insurance sector. One, it will be beneficial for the national economy. It will be beneficial for the Indian people. We wanted them to clarify. If you consider the overall business portfolio of the private insurance companies, 80% of their business are unit-linked. And the returns on the unit-linked policy, they essentially depend upon the performance of the stock market. And when the returns depend upon the performance of the stock market, and conceptually also, when you go in for most of the products in the insurance, in the unit-linked portfolio, you don't have any significant portion of money left for development in the national economy. But here is an institution, Life Insurance Corporation of India. It is being denigrated day in and day out. Often I cut a joke with my friends. Probably the government of India is the only salesman on earth which denigrates the very own products that it sells in the market. And this institution, the Life Insurance Corporation of India, you will be happy to know, over the last 60 years, because this is the diamond jubilee year of the Life Insurance Corporation of India, it has made an investment to the tune of more than 19 lakh crores. And 80%, rather more than 80% of this investment, this has been invested in the government, securities and social sector. Today every lamppost that you see on the streets, probably this would have been financed from the surplus of the Life Insurance Corporation of India. And not only that, the latest 5-year plan, the 12th 5-year plan till now, it is to conclude in 2017, till date LIC has contributed 7,52,000 crore to the government of India. We want to know which Tata, which Birla, which Standard Life, which AIG, which Alliance, which company on earth is going to invest in India, and that to invest in the low interest carrying social sector. And still they are out to destroy and destabilize public sector insurance industry. What is the roadmap? I'll just conclude in few minutes time. What is the roadmap? What is the prospect? Often I see that the tremendous performance of public sector insurance industry has turned out to its undoing, because of its undoing. Why? There is a big reinsurance company in the world, Swiss Re. The Swiss Re says that India is a typically under-insured country. And the Swiss Re says, for every $100 of insurance that is required, the actual amount of insurance that is available is only $7.4. There is a concept in insurance called mortality protection gap. Very simple terms, mortality protection gap means this is the difference between what is the ideal amount of insurance that one should have and what actually is the amount of insurance that one has. This difference is called mortality protection gap. And Swiss Re says there is a huge mortality protection gap in Indian insurance market. And it says for every $100 insurance that is required, the available amount of insurance is 7.4%, leaving a gap of around 92.6%. So $6. And according to the Swiss Re, this $92.6 of mortality protection gap for a single individual, it translates into an astronomically huge sum of money of $7.6 trillion. That is the potentiality of the insurance market in India. And the capitalists, the multinational corporations, the transnational corporations, when they see that there is a prospect of earning profit out of this industry, which has a potentiality of around $7.6 trillion, which I believe is almost half the size of the US economy, they smell a profit. And then they start giving all sorts of argument to destroy and destabilize the public sector insurance industry. But we have, from our experience, we have learned. Our organization, All India Insurance Employees Association, believes that the actual owner of the public sector is not the government. The actual owner of the public sector is the people. So public sector essentially is the property of the people. In the first half we are being told how the Bombay Club, they forced Pandit Nehru to go in for creation of the public sector. Most of us are made to believe that public sector, the creation of the public sector, that was done because of the socialistic pattern of society that Pandit Nehru envisioned. But you would agree with me, comrades, public sector was created not because of the demands of the public, but because of the demands of the capitalist class, because of the demands of the votaries of the private sector who are now demanding dismantlement of the public sector. So what is the net result? Because over the last so many years, almost 7 decades into independent India, the Indian private sector, the captains of industry, they have utilized the public sector, they have utilized the huge profits of the public sector, banks, railways, insurance, port, coal, all other undertakings, telecom. And by utilizing the public sector, they have amassed huge wealth. And they have amassed so much of huge wealth that they want to invest this huge wealth to make a fast buck out of it. And they want to seize control upon public sector like the insurance industry. And at present, out of whatever futuristic projections have been made, the most important is that India is an overwhelmingly young country. Around 60% of our population, they are less than 25 years of age. We don't have any government-funded social security scheme. When they enter the job market, they are trying to get some kind of social security. So pension offers a big opportunity. Private companies, they smell a profit in the pension market, and they are clamoring for more FDI in the insurance industry. One important aspect, health insurance. As an employee of the Life Insurance Corporation of India, I feel that health insurance is a major area which needs our focus and attention. But the basic question is, as a citizen of this great country, can we for a moment imagine that health insurance can be a substitute to government-funded health schemes? We are such a poor country. In our rural areas, 90% of the households, the earnings of the family, head of the family is less than 10,000 rupees. The government itself says that 77% of our people, they earn less than 20 rupees a day. And how are you going to provide them health by giving them health insurance? One important journal, medical journal, Lancet says, for every 100 rupees that is spent on medical purposes, 78 rupees are burned out of the pockets of the helpless individuals. And the Lancet report says 41% of the Indian people, virtually they are being driven to destitution because of the escalating cost in healthcare. You enter into any private hospital, corporate hospital, you go for any pain problem, sardi, khasi, jukam, and by the time you come out of it, you will be having a bill for 10,000 rupees. So how on earth the poor are going to be sustained by health insurance? But the private capitalists, multinational corporations, they smell a profit in the health insurance. And the public sector, we are also trying to concentrate on health insurance. Coming to the general insurance industry, no private company, no multinational company would ever think of going for motor insurance. Often there is some kind of defamation campaign against the public sector general insurance companies because of the problems associated with settlement of motor third-party liability claims. But the private sector, they feel that the motor third-party liability insurance is a loss-making portfolio. Tata company that is into insurance business, Tata AIG, you know. There is a particular model of truck, Tata 407. In rural areas it is called Tata 407. Tata itself feels that this model of truck is accident prone. So the insurance company owned by the Tatas won't go for the insurance of Tata 407. That will be left at the mercy of the public sector general insurance company. Now Bajaj, you know, there is a big automobile manufacturer. Sometime back, Bajaj used to bring a particular form of bike, Kawasaki, some model. And that was also thought to be accident prone. But Bajaj Alliance won't go for the insurance of its own automobile maker. That was left to the discretion of the public sector general insurance company. So the public sector general insurance companies, they are saddled with the loss-making portfolio. But still even then, as a whole, in totality, public sector general insurance industry, they are also making profit. And if these public sector general insurance companies are going to be privatized, then who on earth, which private company will go for the insurance of cattle insurance, poultry insurance, shopkeepers insurance? They are only left with corporate insurance, about which in the morning session there was a mention. I don't want to go into the details. But unfortunately, before coming to my refrain, the concluding line I would like to make. Our government, When I say our government, I don't mean Modi, I don't mean Rahul Gandhi. I mean the ruling classes in India. They always want us to believe that their heart really beats for finance, for infrastructure development. We want to ask them a simple question. There is no reason to go to the office of Facebook. There is no reason to go to US and say that public sector is meant to die. It is born to die. No reason to do that. You don't have to go to foreign soil with a begging bowl in your hand. Here is India's finest public sector institution, public sector insurance industry that is virtually a milk cow that can give you any amount of capital that you require for national development. Please don't destroy, don't destabilize public sector insurance industry. Thank you, friends.
Thank you, Comrade Srikanth, for a riveting session. I am certain whatever, after lunch syndrome the participants may have, must have dissipated, like doubts have been dispelled about the efficiency and the clout that LIC and the insurance companies hold. Some points to ponder about what Comrade Srikanth said regarding this lapse of policies. LIC having a lapse of just 0.5%, right? While the private insurers having a lapse of more than 30%. It is a point to ponder. Does this abnormal high rate of lapses of private insurers mean that people are being missold? People think they are investing into a fixed deposit, may find an insurance notice coming the following year, asking them to pay up. This is some food for thought. And also I leave with another thought, perhaps judging by the tremendous contribution of that LIC has made, the wage settlement have obviously been better than the banks. I now invite